Okay, hi everyone. Welcome to this live webinar. How are you? Hope everything's fine. I believe the sound is okay, right? We are going to record the webinar, so just in case, I'm just a bit. Okay, thank you, Maud. Hi, and hi, Philip. Hi, all. Okay, just to let you know, I have a little cold, as you can notice in my voice, so be patient with me, okay? I can get rid of it. Anyway, I always said more or less the same about trading with technical indicators, right? We have to get to the concept that technical indicators are just tools that we can use to trade or to improve our trading, right? And the combination of such technical indicators, okay, will give us better or less better profits in different layers, crosses, and different time frames. I do believe that you may all know that despite some, we call them oscillators, indicators, whatever, they're not much more and not less than a mathematical average, right? We know that an indicator is telling us what happened in the past, right? But there's no way that it can guarantee us what will happen in the future. However, we are working with probabilities, right? If an indicator behavior over past 5, 10 years, I don't know, or whatever time we consider has shown a certain result average bigger than the other, okay, we will assume that in the future that mathematical probabilities will repeat, right? Mathematical statistics, okay? But at the end of the day, indicators are just that, okay? Telling us what happened in the past and help us to forecast in a certain, speaking, the future. I forgot to turn on the camera, sorry. I know that when I gave webinars, you know, I have been doing webinars with FX Trade since, I don't know, 2006, I believe. So I'm trying to present different things over one webinar to another, try to seek for newer information or other technical indicators, sorry. And many times I get asked, do you trade with this? Yeah, I sometimes trade with those sub 5%, but not always. The idea is that if I'm only going to show in this webinar the stuff I used to trade, right, it will be pretty boring because we are going to repeat more or less the same month after month. So that's not the idea. Anyway, I'm regarding about technical indicators. There's one more thing that I would like to say. It's not just a technical indicator or a signal what we must see in the market. We need to read our charts, right? A certain combination of indicators, a certain combination of tools that help us read what's going on in the market. I just starting with this as an example, okay? Euro-dollar 1 hour charts with the setting I usually use to trade, okay? This is my common usual setting for euro-dollar, and this is what I use to trade on daily basis, right? So you can see that I have this 200 exponential moving average, right? That I tend to follow in bigger time frames, okay? I tend to follow this particular one in the 4 hour charts or in the daily as dynamic resistance and support area. But it's there, okay? So when I'm watching this 1 hour chart, this indicator, this is the one I should ignore, right? Besides that, you can see I have another red simple moving average, 20 simple one, a classical momentum, and a classical relative strength index, right? So what do I do when I start my trading day and read my chart? I'm reading what's going on in the chart. I'm not looking just for a signal, okay? This is since here, right? We have the start of the week pair open slightly higher, gap to the upside, on some relief about Ireland that lasts nothing, right? Monday, European morning, the pair closed the gap, filled the gap, and starts resuming its bearish trend, and sentiment turned pretty euro negative, right? As I always told you, first of all, what I'm reading here, right, is that price after filling the gap, right, it starts to slant, right? Usually when we have that, we know that the trend will probably continue lower. We also have the 20 simple moving average acting as dynamic resistance level, right? And this is a general reading, not looking for a signal just now, just a combination of what I'm saying, okay? We have the 20, as I was saying, acting as dynamic resistance area, right? That's what I'm reading here. The moving average has bearish slope, so the trend is bearish. I also know, okay, that market sentiment is pretty euro negative since a couple of weeks ago, that it's just exacerbated this Monday when around here, right, when we heard about Italy, Belgium, Spain, Portugal, all following Greece and Ireland destiny, okay? So I keep that in mind, right? Despite I'm trading technical, I keep in mind what's going on in the fundamental side of the market, mostly at this times when we know that the market is ruled by sentiment, okay? So what do I see? I have a bearish trend, right? That's what I'm seeing. I have seen in this particular case, for example, that momentum give a buying signal, right? And if you pay attention, this red wick candle opened above the 20 moving average, right? It was sort of at that particular moment buying signal, right? Should I buy at that particular time of the trend? The fact is that no, I have to add to whatever technical combination I use to trade, right, my logical mind, right? It's very difficult to add what I logically think. It's difficult to filter what I'm doing. I'm not being objective because I'm decided not to get into the market. I'm being cold enough, or it's just fear that rules me at this particular time of the trading, right? So we need to control our emotions at this point, okay? And of course, any kind of buying signal I get in the middle of these days, I got just ignored it, okay? At least when I'm looking at this particular chart, I ignore the buying signal. What else can I see when I'm reading this map? I can see that the pair has been sold since now Monday also, right? And does that mean the trend will change? Of course not. But what I'm using that oversold reading, it's telling me that if I don't know, maybe I start my day around these moments, right? And when the pair reach this area, okay? What do I think at that particular moment of the day when I wake up, just starting my trading day, right? And found out this. I found out that the trend is bearish, okay? But it's too late to follow it. It's too late to try it and sell because there's a chance of an upside correction movement. Limited, right? We know that upside movements are limited. So how do I decide when is the best moment to sell? Right, because I know I'm going to sell this cross. I know the dominant trend is bearish, and I know I have to sell it, right? So what will I think? Will I sell with a relative strength index below 30? No, I won't sell at that levels, right? I will be probably waiting for the indicator to move higher in between the 30 and 50 level, right? Okay, and see what's going on with the momentum indicator, okay? So in one particular trade I do take because I was awake at the time it takes place, right? With this one, okay, why did I sell at this particular cross in the momentum and the simple moving average? Because the indicator has already correct its upside, and both momentum and relative strength index cross again their midlines, the 50 and the 100, back to downside with a candle opening below the simple moving average, right? So that's the trade I will take. That's the trade that I would like to take, right? So the idea is not to tell you where or what to sell or when, but to understand that you are reading the chart, right? You are not just looking for the signal and the automatic, let's say, combination of momentum crossing the 100 line, candle opening above or below the 20 moving average. Okay, I buy or I sell. No, I have to add some logical to that, right? And that's why we use some indicators and filters. In this case, the relative strength index is my filter to tell me if I am able to sell at that particular time or not, or buy, okay, if the trend will bullish. Anyway, you know that there are different kinds of indicators. We have leading indicators, lagging indicators, and informational indicators, right? The fact is that what mostly we call leading indicators, right, that supposedly are there to predict future trends, right? Most of them are subdeveloped, and I never did, in fact, find a leading indicator, a good one that works fine for just all currencies in all time frames, right? We know that. On the contrary, lagging indicators, most of the indicators we use when we trade are this kind of indicators, lagging indicators. That's why it's so important to understand and read the chart. Lagging indicator means that an indicator would rather follow the trend than predict a reversal, for example, right? In this particular case, the moving average is following the bearish trend, and it will hardly announce me a bottom, for example, right? This 20 cent moving average, no matter if in the 1 hour and the 4 hours or in the daily chart, it will hardly announce me a bottom in this particular cross. If I want to find a bottom, okay, I will have to apply another strategy or another technical combination. The fact is, at this particular point, I believe it's worthless to try to find a bottom in our friend the euro, right? At this particular moment is not the time to be looking for a bottom, but there are ways to seek for those bottoms. We are going to discuss them in a couple of minutes. However, as I was saying, these lagging indicators that are not able to predict reversals or announce bottom or top, right? They have one problem. In many cases, a trade could be open and closed when it's too late, right? And the trend has already reversed its movement, right? So, for example, the MACD. I hate MACD. I believe that this indicator that gives signals very, very late, and we are almost wasting our time when trading with that. I know that that's my personal view of the indicator. Maybe I don't read it okay, or I don't learn to read it okay. Maybe it's an indicator that some of you use with much success, right? But for me, it's a very lagging indicator. Anyway, the last category I'm saying about indicators is the ones that give us just objective information, right? Indicators that not predict trend or reverse thoughts of the future or follow trend or anything. This group indicators is used strictly to evaluate and describe the market conditions, right? I don't know, the average to range, volatility index, volume indexes or indicators, right? They are giving us particular information. However, I come back to the same. All those indicators, right, are applied, okay, if we use a certain broker, right, they are mostly in telling us what's going on with that particular broker, right? There are few indicators that can tell us what's going on in the whole market, right? In fact, price action, it's adding to what that particular broker is telling us. But that's why I prefer to take a look at volume of candle and the length of a candle to try to predict and foresee what's going on with volume, right? But anyway, that's a particular form of viewing the market, right? We have to learn to take the best of the tools, and that's the best I can take of the tools I have, right? And I like. Anyway, do you have any questions or comments? Okay, we have, when a winning trade, yes. Just says, when I am winning a trade, I feel happy. When I lose a trade, I feel sad. Are these bad signs? How do I handle it, especially the feeling sad or bad? Well, it's not bad. Just, in fact, I do believe that almost all of us feel that, right? You must, the fact is that, we cannot avoid feeling about the market, right? I believe I was reading a very, famous trader, a person I do respect a lot, saying that there's nothing more proud than a successful trader, and when we lose a trade, we feel like the last thing of the world. The fact is that we need to learn to avoid that, and I believe that control comes with experience. When you know that you will succeed in more trades than the ones that you will lose, okay, you will take with more calm the losses, right? But I believe that we have bad habit of entering the market, not being patient. I believe that that's the key. We are not patient to take trades, right? We see the euro slumping and we decide to sell, right? And oops, we sell at the bottom point. So we need to be patient, right? The trend is bearish. So Will I be staying? And when I wake up, the euro was at 129.98 when I turn on my chart. I said, wow, euro is lumping. Do I sell at this level? Of course not. Because it was overextended. My indicators were telling me that and said, okay, be patient. Wait for a pullback. Wait for a break lower, right? That's the other option. And then we need to control our hands. We put our hands below our butt, right? And wait till we have a technical confirmation. We don't need to rush and be patient. I believe that patience is overall the worst problem we the traders have. Anyway, I'm talking about the combinations of indicators and the different indicators we have. And here our friend Philip says, take supplements, take beta vitamins. Do you believe that that will help? I will tell you that what I usually do is plan trades, right? To control my emotions. I do plan trades, and when I get into the market, I place my stop, I place my limit, and I usually move away from the computer, or at least from that chart, right? If I trade in, I don't know, if I decide to take a trade in the euro dollar, for example, I will not be watching that euro dollar after I trade it, okay? After I place my order, the deal is done, okay? I enter the market, place my stop, place my limit, and there we go, right? That's what I tend to do. Don't watch the euro chart. Go for coffee, for a walk, or whatever, okay? Anyway, I'm talking about different trading strategies for different time frames. I know that I have been asked so many times about this one. Okay, Ken says, can you help us see what you see when pair is exhausted? Well, okay, Ken, that's a great question, right? When I call a pair exhausted to downside, right? Usually, what I follow mostly that, and I do believe that we are going to see some corrective movement around this time consolidation, is take the 4-hour charts, right? I try to take a look at the indicators, right? And when the momentum is very below in this particular days, right? The momentum is way below the 100 level, right? And we have a 4-hour candle opening and a pair, and the momentum indicator bounce back north. Okay, that's when I say, okay, this is a little exhausted. We are going to see some consolidation, right? Or an upside corrective movement before wait and resume of the bearish trend. And in fact, the strength index, as you can see in the euro, is also saturated. However, it's not telling me we are going to see a bottom in this particular pair right now, right? But the exhaustion conditions I usually see in the cross, right? Like in this case, usually generates this kind of, lateralization. We have, I don't know, maybe 1, 2, 3, 12 hours in range, right? As you can see, there's a 4-hour chart. So that's what I say. Okay, that's not the time again of selling. I will be waiting for another kind of signal or pullback, an approach to the 20 moving average in the 4-hour charts. Okay, that will be great for me, right? For example, approach to this 20. Okay, that will be a selling signal. Many cases. In this particular case, I was not able to trade it because it was, 3 a.m. in the morning here. I was sleeping, right? But that's what I'm looking for, okay? In this particular case, I don't consider that despite, right now, despite momentum has head slightly higher, right? See that the relative strength index is still pointing lower, right? I need both indicators in the 4-hour charts to be heading higher to say that the pair is exhausted to downside. And we could see some consolidation, right? And besides, I also take much notice of the time of the day we are talking about. In this particular moment, we are in the middle of the European session and ready, okay, well, 2 hours more, right, till American opening. Well, I won't be talking about exhaustion. I do expect pair to resume its downside trend, right? That's one of the things I watch. And the other thing I watch, don't get scared, right, is my beloved 15-minute charts with the 3 bands system, right? This is a very simple trading strategy, and despite a 15-minute chart, it's telling me when the pair is exhausted to downside, when we are going to see some pullbacks. But this one is valid, only in the middle of of a big session. I mean, it won't worth to take a look at this kind of charts or this kind of settings in the charts when we are in the, when after London close, for example, or in between American Asian session. At that time of the day, it's not worth to take a look, right? But if you see, and this is a very, very simple setting. I usually follow it when we have this high volatility in the market, or we have fundamental news that move the currencies a long way in a few couple of minutes, right? We have euro losing over 100 pips in 4 or 5 15-minute candles, less than an hour. So that's when I turn to this kind of indicators. I have two choices in here. That will depend of how brave each of one of us, right? Is as I was saying, I wake up with the euro around this level, right? I wake up, so to speak. Okay, give me a second. No, close. I take a look at this also. I will put my, okay, there it is. Right, pair was around 130 when I started watching the market earlier this morning for me, right? So when I take a look at this particular one, this setting is just a relative strength index, a common one, right? And this is again the 20 simple moving average. Okay, and this deviations I have in here, right, are just levels added around the moving average, okay? 340, 550, 890, 2000, and the same with a negative sign in front. Less 340, less 550, less 890, and less 2000, okay? Just this deviations levels, kind of a Bollinger Band, but instead of a percent, it's a fixed number, okay? So what I see at that particular moment of the day is that the pair was in the third band. I told you guys that usually the pair tends to bounce in the third band, and it's a great way to find a counter trade in the euro, a quick one, right? You can consider it a bit risky, but it's very common to see the pair reaching the third band and correcting to the first one like it did in this particular case, right? And again, I'm reading the chart, right? I enlarged it a bit, right? The corrective movement was made. We have around 30 pips, right? Of a correction, but what I'm seeing right now is that this first deviation, right, is bending lower and acting as a resistance, right? The pair is not able to break above it, right? So that's intentional. Chart telling me that maybe the corrective movement is already complete and the euro is ready to resume its bearish trend. Unless this candle reach this 20 simple moving average, I would expect the pair to continue falling, right? Corrective movement is done. Okay, so I could take a look at setting the cross right now. That's something I do also pay attention. But as I was saying, this works for almost any crosses. And when the moving average deviation starts to bend lower, it's very, very rare to see the pair falling 20 pips below it. In fact, in this particular case, it was 13 pips or so, right? Just candle spike. So you can either choose to take a counter trade looking for this first one, or say, okay, it's too late to sell, right? And I will be waiting for a correction in the case. So I do pay attention a lot to this one, and it's valid to almost any pair, okay, except pound. Pound can move away from the third and reach levels in between the third and the fourth level. Pound is different one, okay? Anyway, okay, I will take, one big poll. I do believe that all these are trading cells, right? This is one for counter trade, this is one for trading, right? The momentum, the ones I use. If you take a look at my chart, okay, this is the one I use, the setup I use, right? Exactly the first one I was telling you about. The only difference is that, meaning the momentum and the 20 simple and the relative strength index to avoid getting me into late in the market, right? The only thing that I add to what I told you before starting trading is that I take a look at my 4-hour charts, right, and try to determine static support and resistance areas, right? So I will waiting for confirmations either up or below those, right? Anyway, and the last one, I'm talking about finding bottoms, another trading setting that I do prefer for bigger time frames, right? Is the combination of Bollinger Bands with relative strength index. But I do prefer this in the bigger time frames, right? This is a setting, okay, that we can use to trade to find bottoms in the cross, okay, or tops. Sorry, give me just 1 second. We know that the concept of Bollinger Band says that when the bear reach the upper band, should turn back to the midline, and if it lost the midline, could probably break and continue to the lower band, right? That's the usual setting in Bollinger Bands. However, we know that if we take a look just at the Bollinger Band, right, we could see these cases, right, that the bear reach the upper band in the middle of the bearish trend and start changing because it's a lagging indicator, right, and the price continues rising. Right, I have never come back to 47 since June this year. Meaning, I have already burned my account if I had decided to sell at this point, right? So, what's the way to filter it? How do I filter it? Mostly in the biggest daily charts to try to determine a trend change. There's where I come into play with the relative strength index, right? When the relative strength index reaches the 70 level or moves above that 70 level, like in these two cases, right, I will market them here, okay, and let's set here, right, the pair is above, right. What do I do? Once the pair, in this case it was not the best because it did not break above 70, but let's say that I need to wait for a candle opening again. Next candle open should open inside the Bollinger Bands, right? And that will signal a probable top. In this particular case, the next candle did not open. We reached the medium line, and we've never been able to open below, so that was not the greatest. And besides, relative strength index was not in the upper side. On the contrary, in this case, we do have relative strength index above 70, sorry. We have price extending below the bounce, and we have next candle opening inside bounce. That's the typical setting that's telling me there's a top in place. If you take a look, we have something pretty similar around this bottom, right? In this particular case, we have a clear bottom in here in the cross and an upside value. That's the kind of setting I tend to use to try to find a bottom or a top in the crosses, this particular setting, right? However, as I was saying, it all depends on the market circumstances because we need to add all the fundamental perspective to what's going on in the market, okay? I will not be looking for a bottom right now in euro. I want even better, okay, to try to find a bottom right now. I don't, and that's it, because I'm not sure there will probably reverse. I was taking a look yesterday, technically speaking, right, at this daily chart, and I believe that this 2920 is the next target zone for pair, right? So when we reach that level, we can talk about trying to find a bottom or not. But let's see, okay? Anyway, that's my way to see it, of seeing the market, right, by settings. But what I usually tend to do is combine, okay, the readings of technicals, the general environment of fundamental side, right, and read the chart. As I was saying, not just waiting for a signal. I said, okay, I have a buying signal in this particular case, right? We have it, and we get that 70 pips in that case. I will not be buying in that particular moment. I would rather be selling once I have a bearish one, okay? And it takes 2 more candles to get me a selling one, because I will try to follow the trend. If you take a look at any kind of indicator setting, right, and any kind of trading system, right, you will notice that you have signals against the trend and favoring the trend. Any kind of signal against the trend, like in this particular case, okay, that gave us 60 pips, and in this case that gives 70 or so, right? The fact is that the signals against the trend are not even close to giving the number of pips we get when we are following that trend, selling signals. On the contrary, in the cross, okay, have gave the most of double 150 pips in this case, 160 in this one, and in this one, well, we have another good one. But that's what I'm trying to say in here, right? Keeping that in mind also when you have a trading setup, right? Signals against the trend probably will give you half the profit you can grab following the trend. So if you're going to trade against the trend, I'm not saying it's bad, but be a bit more conservative with your stop loss. Be a bit more conservative with your take profit, right? If I'm going to trade against, well, I will ask a little less points to the market. Maybe one of those against the trend signal is the signal that finally marks the bottom of the rally and triggers a reversal in the cross, right? But at that moment I take my trade, I don't know that, right? So I don't need to risk. I don't know. I know we are not able, but or at least I don't believe we are able, right, to find to determine a bottom, catch a complete rally from that bottom to the maximum of the top. Meaning we have to wait for confirmation of that bottom. I don't know if any of you have managed to buy dollar Japanese yen at 80.30 or 80.40. I don't believe so. Any of us did. Because when the pair was struggling around that area, we were all waiting for a break lower, right, in the dollar Japanese yen as an example. So nobody can grab that bottom exactly around 80.30. Maybe a bit higher when we have technical confirmations that the reversal trend will start, right? And in fact, I was following dollar Japanese yen. The pair is unable right now to break higher and finally give up. I was following bigger time frames, okay, that we have kind of been forming around the roof in here, showing that the upside is limited at this particular point, and the pair is turning bearish, daily bearish, 4 hours bearish. So I could expect some downside movement right now in this one towards 82.60. So that will be the area, okay? And the side stocks are waiting in the currency. We have this safe haven. So those are the things I pay attention to, not only the technical indicators, okay? Anyway, sorry, I talk too much. Anyway, do you have any questions or comments? We have a couple of minutes, so that's the idea, okay? And Boyke says, yeah, hi Boyke, how are you? Yes, try to take your emotions out of trading. I know, I believe that was the most hard part for me, at least for me, okay? Taking the emotions away from trading. So, as I told you, I tried to distract myself, okay? That's why I decided I would take a trade, place an entry, stop, and a limit, and move away from my computer. Go for coffee, go for, I don't know, whatever, okay? But you have to understand that you need to trust in what you're doing. That's the main problem I do believe we have, right? We usually try the setting of indicators, and once it fails, we give it away. And the fact is that we need to test it by ourselves to trust in that particular combination, okay? And once you have confidence in what you're doing, you will not be suffering any more emotions with trading. And we need to understand that sometimes market reverses and the uncontrollable things take place, right? And we can lose a trade. And losing a trade is not dying, it's not a dishonor, it's not a shame, right? At least when we are losing 1 in 5 or 1 in 4. Okay? Anyway, do you have any questions or comments, ideas? Nothing? So silence. What specific kind of entry triggers and trade management would you recommend for us? Okay, that's a good question, right? That's a good question. Regarding the entry trigger, okay, do you have a particular setting of indicators to trade or no? So the entry trigger, okay, at least for me, okay, would not be the same for you, okay? I would say, if I have to take a decision regarding euro right now, I don't know, Ken is around, Ken, are you around? Yeah, Ken is around, right? We have the webinar past Asian session. Okay, sorry, I made a mess with the chart. Okay, and I was saying selling euro around 31.60, right? The fact is that the pair rises to 31.50 past Asian session. Okay, I decide my entry. Okay, depending of the market circumstances, right? ID entry depending on the market circumstances. When the pair, for example, coming back to euro, I will tell you how I do decide the entry point. Okay, after yesterday we reached that 30.60 area. Okay, and the pair starts looking exhausted and starts an upside corrective movement. And with Asian opening, I said, okay, the level to sell will be the 31.65 zones because it's a static resistance level. Okay, it's the 20 simple moving average in the hourly chart, right? It was the level to sell because the corrective movement and due to the environment the market has was the level that the pair could reach within a corrective movement and then start falling down again, right? That's how I decide an entry in the middle of a counter trade. And this particular moment of the day, right, when euro has already set a fresh low, right, and we are seeing some upside corrective movements, I will be considering selling around 38 or 31 right now. Okay, right now I will wait either to pair to extend its upside to this level, okay, because we have static support, resistance in this case, support broken, the 20 simple moving average in here, the exhaustion conditions in the smaller time frames showing an upside corrective movement. I will place my stop barely above this 31.30 price zone, okay? And the other way, I will wait for a break lower right now because indicators are heading north. So unless they bend lower, I won't be selling the pair, okay? And we need to break the daily low to trigger more stop losses, okay, of all the buying systems or the buyers in the market, sorry, and then get into the market, okay? If we have not the circumstances we are having an euro, let's say about a typical day, I will wait for the momentum to cross the midline in the forward charts and the candle open below the 20 simple moving average in any European pair, right? And then I will be deciding the sell, right? That's the way I decide my trades. I tend to watch what's going on in the market and then decide my trading zones, right? Another thing we discussed yesterday in the webinar, the pair would reach 99.20, but not much more lower and need to rebound from the level. In fact, it rebounds dollar exclusive, rebounded 100 pips once it reached that level. However, right now, momentum is heading lower. We are below parity and below this 20 simple moving average. It will also 99.20. Pair would probably extend the downside towards 98.68. Okay, so I will be waiting for an hourly candle open below 99.25. Okay, and go for the downside towards this price in between 98.60 and 80. And regarding the leverage, the risk management, I do believe that we should not risk at one time over than the 5% of our account, right? That's the most we can risk. Okay, and I do believe that when we are already advanced in trading and we are a bit more successful. So what I tend to do, and depending on the market circumstances, it's trade in between the 2 and 3% in a certain pair and left the other 2-3% of my account to trade in another currency, right? I don't like to put all my eggs in the same basket. I like to trade different pairs at the same time, right? So if I decide, I don't know, to sell the Swiss in a certain time of the day, I will be doing it with a 2 or 3% of my account, and probably use another 2 or 3% to buy or sell another one. Okay, that's at least how I do it, right? If I see something pretty good and a real strong sign, like I don't know, for example, when Alpha break below 96.60, that I was waiting for that break for days, months, weeks, right? Then I go with the 5, the whole 5 in that particular time, right? But if you're just starting, I would recommend you to use even though that's the last 2% of your account in each trade to really gain confidence. Again, this is a matter of patience. We need to develop our skills. A doctor is not ready to do a surgery after 1 year studying medicine, right? A doctor needs a lot of years of study, a lot of years of practicing till it's ready to open someone and perform the surgery. I believe that same happens here. Okay, we need a lot of practice, a lot of learning, and a lot of reading what's going on in the market, reading the charts, and not just reading the signals, not just saying this indicator cat here, this is the moment to get in, right? Because as I was saying today, I don't know, I wake up today, and the first thing I read is what German and Spain yields have widened to record highs above 700. We were in 400 or 500 a couple of days ago. It's something crazy, right? That's something pretty wild and pretty euro negative, right? So if I have a buy signal in euro at this particular time of the day, I won't take it. Okay, it's too risky. That's the issue. It's too risky to take a buy in signal. Okay, so I will wait. I have to be patient or focus in another currency, right? We have a lot of pairs to trade, so change the ones that you are focusing in. Okay, if you have a very bearish euro bat, it's exhausted to downside, it's not the moment to sell it, well, let's take a look at another one. Maybe I'll see. That's also interesting these days. May says, it's better to trade higher time frames than lower one to help better control our emotions. The answer will be yes and no. Usually, higher time frames signals are more reliable. That's what I'm trying to say. Signals in bigger time frames are always more reliable than in smaller time frames. I can rely in signal till 1 hour time frames. When we are talking about 30 minutes or 15 minutes, I just see that the signals get starting to fail more often, and in the 4-hour charts, on the contrary, will not. However, I believe that if you use larger time frames, right, if you have 4 hours or daily to try to control your emotions, you need to trade with a smaller leverage, right? Because you need to enlarge your stop. You can enlarge your stop and enlarge your targets, right? You take profit. Okay, but you need to reduce your leverage to don't risk much more money that you are able to. So, I do believe that trading in smaller time frames would be a good idea. Not much more than the 4 hours one, but yeah, you will learn to filter your emotions in bigger time frames, and then you can move to smaller ones and grab less pips, but maybe more money. Right? With a bit more leverage in a shorter time. Okay? And well, that, I don't know, I always say the same. If you have to trade, if you see a signal, the signal should take not much more than 4 or 5 candles to accomplish the target, right? So if you're trading the 1 hour charts and you have a good signal in 4 hours or so, you will be already outside the market. Hopefully with profits and ready to take another trade, right? So, on the contrary, if you're trading the daily charts, the signal could take, 4 or 5 days to develop. So you will be stuck with your capital there for 5 days. So that's the concept I use for trading. Of course, it's mine, and won't mean everyone needs to use it. Philip says initial stop and trade management, scale out, etc. No, I don't scale out. But initial stops and trade regarding stop losses, okay, it's related to what I was just saying, okay. I turn the chart on because we are recording the webinar, and that's better for the recording, okay. If we are going to trade a 15-minute chart, right, my stop losses and my take profits, okay, depend on the on the charts I'm trading, okay. If you take a look at the 15-minute chart in euro, right? Take a look at the chart. What is the average? The pair moves in those 15-minute charts. The average. Okay? Let's say that without exceptions, with some exceptions, the average in between 15 and 20 pips. That's average. Right, that's average. 15, 20 pips. If I see a signal and it will take 4 candles, meaning 1 hour to develop, how much the pair could move in an hour? 15 pips? 50? No, I don't think 50. 30? Yeah, probably 30 pips. So if I'm trading the euro dollar in the 15-minute chart, my target, my stake profit won't be larger than 30 pips. but my stop loss should be accordingly in between 20 and 30, not much more. However, if I turn to the 4-hour charts in the same pair, okay, what's the average? 40, 50 pips? Yeah, 40, 50 pips. So how much do I take? The pair could move in 16 hours a bit more than half a day. Could move 80 pips? Yeah, it could. Euro average half a day could move 80 pips. So my target would be accordingly to that, and also my stop loss. If I go to the daily, it will be even bigger. If I move to pound, that average much more pips than euro, okay, daily basis, not these days, but usually, okay, I can use larger stops and larger profits. If I move to dollar Japanese yen, that's barely moving, I don't know, 50, 60 pips a day, right? And how much can I ask for dollar Japanese yen in the 15-minute charts? 10 pips, and it will be a lot. I mean, see, that's the logical of trading. Okay, I cannot expect a 15-minute signal to give me 200 pips, no matter what. It could give me a signal in the 15-minute charts. Okay, I don't know, a selling signal. Let's say in here I have a selling signal, and the pair starts falling, okay, without changing the BS for 200, 300 pips in this case. But that's not the idea of trading, right? For that, I will take to bigger time frames. What we can use, or what I tend to do also, not in the 15-minute charts, but in the hourly charts, okay? I try to trade in between resistance and support areas that I explained to you. So if I have the very bearish trend line in the case of euro, and we saw the pair breaking first support, like first support target, and extend into the next one, right? What I tend to do, or what I would like to do in the cases I know the trend will probably continue, is move my limit and also move my stop and wait for the next level. But I also move my stop, okay, to profits, at least 10 pip profits, not to break even. I don't want break even. I want to win no matter what. I want to win. Okay, so at least I warranty I will take 10 pips. But that depends on market circumstances and the average pips the pair has made intraday talking. Today we have lost more than 200 pips, so it will be tough to see the pair falling below 29.57 low, right? But if it starts rising, then I could attempt a setting from a higher level, okay, targeting that say low or even lower. But that's me. That's the way I see the market, okay? Philip says, do you think the final target 4 or 5 candles is a good one on all time frames and pair? Mostly it's an average. I tend to say that's for candles. And once I went to Spain a couple of years ago and met a lot of traders at the ATC, meaning Marcus A. Tucker, Rob Booker, James Chen, and all those, the guys, the fact is that, Andre pair, the fact is that talking with each other, we find out that some said 3, some said 4, some said 5, but the average is 4. No much more than that. Okay, so yeah, I do believe it firmly. I do believe it before, and I get reinforced the concepts once that. Okay, I will take Robert questions, and I do believe that we have to leave the room because it's the time, and we have another speaking coming. I believe so. Okay. So this is what I'm seeing right now in euro, okay? For me right now, and I don't risk much more than this, 29.20. 29.20 is the target for the euro, okay? Once around those levels, we could see an upside corrective movement a bit more interesting. The length and the strength of that upside corrective movement will tell me whether the pair will manage to break lower or not, okay, above that, below this 29.20. But right now, my target is that. I would say the same. I have long-term targets. I don't have, long-term targets, okay, because those long-term targets are a bit risky, and more risky than so-called experts like me announce it in here, okay? I believe that saying that the euro will reach parity or will reach 150 right now is useless. I mean, I'm exaggerating the levels, right? But it's useless. Because if I said euro will reach parity, for example, right, and barbarity, every time the pair starts breaking higher, a lot of people will be trying to sell looking for parity, considering the fact that they will win more money. right? We all did it when we were new. I developed a lot of us did. And the fact is that's the quickest way to burn an account. Trade with a long-term target in mind. Okay? So if we know how to control emotions, if we know where the reversal point is and say, okay, pair is now running to parity, but as I'm saying an example, okay, if we regain 33.50, then it will reverse and turn bullish, right? So that's the way to see a market, both sides, never one side. But for me right now, it's 29.20 the target. Once we reach that level, as long we consolidate around, or even if we break, then the next one will come around here, 24.40 or so, 25, 20, yeah, this area. Okay, that's my idea. But I go step by step, let's say, okay? Thank you, Vicky. You're welcome, Philip. And Rora says, did I see pound going lower than 155? Yeah, the pound is being delayed right now, so it would probably extend the downside after breaking 2017. Okay, thank you for being here. Okay, thank you. I really enjoyed the webinar. Hope you did too. And hopefully we'll be back in a couple of days or weeks. Right, Vicky? Thank you all. Really. Bye-bye. Hi, John. Long time without seeing you. Okay, bye-bye.